All right, let's dive right in. We're about to tackle one of the most intricate and, frankly, one of the most financially important parts of the tax code, the special needs tuition deduction. This is really where you see tax law, medical necessity, and education all colliding. And, getting the nuances right here can literally change a family's financial world. So let's get into it. So here's our game plan for today. We're going to start with the legal bedrock, the absolute foundation of all of this. Then we'll get into the special school doctrine, which is a huge one. After that, we'll cover what happens when a school doesn't qualify, the role of IEPs, and how all this plays with modern savings accounts. And we'll wrap up with the most important part, how to actually defend this deduction if you get that dreaded letter from the IRS. This entire complex topic really boils down to one single massive question. Is paying for school a personal expense which you can't deduct under Section 262, or is it medical care, which you can deduct under Section 213? The answer isn't simple, and it creates this huge financial fork in the road for families. The IRS and the courts, well, they have drawn some really sharp lines here, and our job is to figure out exactly where they are. Okay, first things first, before we can even begin to talk about special education, you have to have a rock-solid understanding of how the medical expense deduction works in the first place. Everything we're going to discuss is built right on top of this foundation. So the rulebook for all this starts with Internal Revenue Code Section 213A. This is the law that says, yes, you can deduct medical expenses. But, and there's always a but with the tax code, right? There are two big hurdles. First, it's an itemized deduction, so you have to give up the standard deduction. Second, and this is the big one, you can only deduct the amount of your medical expenses that is more than 7.5% of your adjusted gross income, or AGI. Now, for families paying tens of thousands in tuition, clearing that 7.5% floor, well, that's usually not the hard part. So what does the IRS actually consider medical care? The definition is right here in Section 213D, and it's absolutely pivotal. It's pretty broad on the type of condition. It can be physical, mental, whatever. But it's laser-focused on the purpose. The expense has to be for the cure, mitigation, or treatment of a disease or condition. And that's where things get tricky, right? Because we usually think of education as personal development, not medical treatment. That's the core conflict. This brings us to a really crucial rule that the courts came up with. And believe it or not, it came from a case that had nothing to do with special education. It's called Ochs v. Commissioner. Here's the story. A wife was recovering from throat cancer, and the doctor said, hey, to keep her from getting sick again, you need to reduce her stress, send the kids to boarding school. So the taxpayer did, and then he tried to deduct the tuition. His argument was pretty simple. But for my wife's illness, I never would have had this expense. And the court's answer? A hard no. The judges basically said the boarding school cost was a family expense to replace the wife's caregiving. It wasn't a direct treatment for her cancer. This is a huge deal because it set the precedent. Just because a doctor recommends something doesn't automatically make it a medical deduction. The big takeaway for us is this. For school tuition to be deductible, the school itself has to be the medicine. So with that foundation in place, let's talk about what is basically the holy grail for taxpayers in this situation. It's called the special school doctrine. And when a school qualifies under this rule, it's a real all-or-nothing game. If you win, the entire cost can become deductible. So where does this rule come from? It's straight from Treasury Regulation 1.213-1, and it lays out a clear two-part test. You have to ask two questions. First, is the main reason the child is at this particular school to get help for their condition? That's the principal reason test. Second, is the regular schoolwork, the reading and math, just incidental to the medical services they're providing? And if you can say yes to both of those, boom, the whole shebang. Tuition, room, board, it's all potentially on the table as a medical expense. Let's make this real with a classic case, Greisdorf v. Commissioner. It's a perfect example. We had a student with a severe emotional disturbance. The IRS looked at the school and said, hey, this is just a college prep school, so the education is the main point. But the school had this incredible concept it called a total therapeutic milieu, where literally every part of the student's day was structured to be part of their treatment. And you know what? The tax court sided with the family. They held that the school's resources weren't just the 50-minute therapy sessions. The resource was the entire environment. It's a game-changing idea. The treatment wasn't just happening in an office. The entire school day from start to finish was the treatment. Because of that, it qualified as a special school, and the full tuition was deductible. Now, for every hero, there's a cautionary tale, right? Let's look at the flip side of the coin with Urbauer versus Commissioner. In this case, a student with behavioral issues went to a school that, yeah, it had a therapeutic component, but when the court looked closer, it said, this looks and feels like a school whose main purpose is discipline and college prep, not a medical facility. And for that reason, it completely failed the special school test. This chart just lays it all out, crystal clear. On one side, you have the Greisdorf type of special school. The main reason for being there is medical. The education is secondary, and you see medical staff. The result? 100% deductibility. On the other side, you've got the Urbauer type school. The primary goal is education, and you can only deduct specific medical fees you can carve out. The difference, as you can see, is just night and day. Okay, so let's be realistic. Most schools that kids attend aren't going to meet that super high bar of a total therapeutic milieu. So what happens in the much more common situation where the place is definitely a school, but it offers special services? You can't use the special school doctrine, but don't worry, that doesn't mean it's game over. You're not out of options. The IRS actually gave us a lifeline here in a document called Revenue Ruling 7285. It created what's known as the excess cost model. Think of it this way. Let's say a private school's regular tuition is $15,000 a year, but for a student who needs extra support, they charge an additional $10,000 surcharge for their special program. Well, that extra 10 grand, that excess cost, is considered a deductible medical expense because it is paid specifically for medical care. And this next one, Revenue Ruling 78340, is also a really big deal. It makes it clear that you can deduct the cost of specialized tutoring, for something like dyslexia, for instance, as long as it's for a medically diagnosed condition, and the tutor is a qualified professional. What's so powerful about this is that it separates the service from the place. The medical care doesn't have to happen inside a hospital or a special school to count. All right, time to talk about the paper trail, specifically the Individualized Education Program, or IEP. It plays a massive, massive role in all of this, but probably not in the way most people think. We're also going to quickly touch on some other related costs you might be able to deduct. Okay, let's just get this out of the way right now, because it is a huge, persistent myth. I'm going to say it plainly. There is no such thing as an IEP tax deduction, period. Having an IEP does not, by itself, grant you any kind of tax deduction in the tax code. But, and this is a really big but, an IEP is your absolute best friend when it comes to proving your case. It's incredibly powerful evidence. Why? Well, first, it's an official document that establishes the disability. Second, it often prescribes services like occupational therapy or speech therapy, which are already considered medical expenses on their own. And third, and this is the gold standard, if the public school's IEP team itself says, we can't serve this child, they need to go to this private school, well, that's about the best proof you could ever ask for to satisfy that principal reason test we talked about earlier. And hey, don't just stop at tuition. Remember to think about the other related costs. Transportation to and from that special school, or even just to therapy sessions, that's deductible. You can use the standard medical mileage rate for that. Even lodging can be deductible if you have to travel for care, though it is capped at $50 per night per person if it's not part of a hospital or a special school. Okay, we're in the modern era of financial planning, so we have to talk about how all of this plays with tax-advantaged savings accounts. Specifically things like 529 plans and the newer ABLE accounts. This adds another layer of complexity. So you can pull up to 10 grand a year from a 529 for K-12 tuition, and ABLE accounts are even broader. But this is super important. You cannot double dip. The IRS has a strict no double benefit rule. You can't take a tax deduction for an expense that you paid for with tax-free money from one of these accounts. So here's the smart play. You use the ABLE funds for costs you can't deduct, like the room and board at a regular Urbauer-style school, and you pay for the deductible tuition with post-tax dollars. That way, you preserve your medical deduction. It's all about strategy. All right, let's land the plane. This is where the rubber meets the road, the most practical part of our discussion. How do you build an absolutely audit-proof case for your deduction? Because remember, when it comes to deductions, the burden of proof is always, always on you, the taxpayer. To have any hope of winning an audit, you need to build what I call the golden thread of documentation. It's an unbreakable chain of evidence that connects the child's medical condition directly to the expense. You need 4 key things. 1, a formal diagnosis from a doctor. 2, a prescription or letter from that doctor saying this school placement is medically necessary. 3, a letter from the school itself explaining exactly what special services it provides. And 4, the IEP if you have one, which backs everything else up. So after all these cases and rules and regulations, what's the one thing you really need to remember? It's this. The IRS and the courts, they honestly don't care what label's on the building. Is it a school? Is it a hospital? It doesn't matter. What matters is the substantiated purpose of the expense. Can you prove, with that golden thread of documentation, that the money was spent principally to treat, mitigate, or cure a medical condition? If you can do that, you've got yourself a defensible deduction.